Hello there, welcome to this episode. In this episode, we will talk about risk management and how real risk management is and how we can make money by not risking much money. As you can see, always we care about percentage. So we don't care about lot size, we don't care about, for example, pips, we only care about percentage. So, what's that mean? Let me show you an example. Imagine you have, for example, I'm saying, for example, you have $10,000 and you want to trade. You have to trade only with 1% of risk, so it means $100. You can increase the risk up to 3%, but I recommend 1%. So you have $10,000 and you have 1% to risk, which means $100. So imagine you win 10 times and you lose 5 times, for example. This means you traded 15 times and you have accuracy about, for example, can say 60 to 75% of accuracy. Otherwise, we can say that you gain more than your losses. So let me explain more clearly, then we're going to find the best way to risk management. So, as I said, you have $10,000 and you want to risk 1%, and you have to risk 1%, up to 2 or 3%, not more. Remember this. Never risk more than this, and always risk 1%. I personally risk 1%. So, let's write it, for example, a highlighter. You will win one time, and let me delete this. So it, this is now okay. So it's 5, so copy. Imagine this is your trades. 5, 10 times. So you trade 10 times and you win, for example, like this. You're going to, for example, this is red, this is loss. Another one, this is loss, for example. And this is loss, for example. And also this is loss. So, how many times you win? 1, 2, 3, 4, 5, 6. And 4 times you lost. It's that simple. And what is risk management? This is risk management. This is we call risk management. Always exact risk, which means 1%, for example, in this case, $100, and you will gain, at least, according to your strategy, 2R, which means risk per reward. This means you risk $100 or 1% to gain $200 or 2%. It means this. It means this. 4 times 4 1%, it means 4%, 4% you lost, and you won 6 times, which means each 2%, 2%, which means 12%. And overall, or total, 12 overall, 12 minus 4, which is 8%. This is how you should trade. You have to find or create a strategy that has, for example, minimum of 50% of win rate, which means you have to win 5 trades out of 10 trades. In this example, you win 6 times out of 10 times. And this is the results. For example, you traded one day and you gain 8% that day, for example, which is very good number. 8%. And 8% is $800. $800. This is how risk management is. You risk 1%, which is, for example, $100, and your gain is twice. You gain 2x, 2% or $200. When you lose, you just lost $100, and when you win $200. And this is how trading is. So maybe you have question, how can I calculate my lot size? You can use calculators on web, which you can find on Google, or you can calculate them manually. This is how manually you can calculate. Going like this. So this is how you can calculate. I wrote this on my channel before, but I want to write it again. This is lot size, for example, per pip. The movements of pip and how dollar or how currency moves. So if you trade 10 lots on position, on one position, 10 lots on position, you open 10 lots, then each pip is $100. Each pip, each one pip, $100. Sorry. If you open one lot, it's $10. If you open 0.1 lot, it's $1 per pip. And if you open the minimum lot size that you can open, it will be 10 cents. Per pip. Per one pip. So, what is this? How I need to understand this? This is very simple. Let me add one thing. If you open 100 lots, it means each pip is $1,000. 1,000. So each pip per one pip. So, for example, your strategy is not always and ever, for example, everything can change. For example, one time your strategy stop loss is, for example, the first order or first position. First position is 20 pips, for example, and the next position position is 10 pips of stop loss. Okay, so SL for this and a stop loss for this. For example, your first position is 20 pips of a stop loss, and second position is like this. So you say, how can I calculate? As I said, you have, for example, $10,000 and you want to risk $100. $100. If I want to risk $100, I have to risk 1%, and it's $100, as I said. So in this chart or in this cheat sheet, I wrote one lot, $10, which is 20 pips. 20 pips. So we don't use one lot for it. If I want to open 0.1 lots, it will be $20, for example. So how big I have to open? It's very simple. $100 divided by 20 pips. $100 divided by 20 pips. So we don't use the format like this. We go like this. We say 20 pips divided by $100, which is 0.5 lots. And for this, another time, for example, we have 10 pips divided by our $100, which is 1 lot. So this is like this. So this is that simple. 20 pips divided by $100, which is 0.5 lot, 10, and it's 1 lot. That's simple. So, according to this. But maybe you ask me, how can I understand it well, or what is the cheat sheet for this? I will say that. Another example with another method. This is not important, but I'm saying like this. So understand, please. So you say I want to risk $100 and I have to stop loss 20 pips. I only do it for first position. First position, 20 pips, 20 pips. This is another method. You're saying you want to risk 20 pips and 100 divided by 20, which is 5, and you divided it by 10, which is again this lot size, this lot. This is another example. Or you can use a, for example, website of, for example, position calculation. And let me show you. So this is the website, cashbackforex.com/tools/position size calculator. You can find it on Google. So it's like this. For example, we're going for gold, instrument gold. Our deposit currency is dollar, and our account balance is, for example, $10,000, and we want to risk 1%, or we can change to USD and then calculate, and this is like that, as you can see. This is lot size, 2 lots, for example. So let me explain further. Switch it to pips. You want to 20 pips and 1 pip size. 1 pip size is, for example, $1, and you want to risk 1. This is units of traded size. 5 lots. It's like that. Or change it, for example, 1 pip, for example, which is, for example, this. 1 pip size, calculate 15 units. This is not accurate, as you can see, because it says 100 units per 1 lot. So, as you can see. But your 1 pip size is, for example, $10 per lot. Remember, as I said, you have to choose for that. 1 lot is $10. So 1 pip, $10. You want to risk 1%, and stop loss is 20 pips. And this is the proper way. So for summary, I don't use this, but you can use this. Come and change this to stop loss by pips. Your stop loss, for example, is 20 pips. Account balance, for example, and the risk. And pip size, set it 10, which means 1 pip is $10 with standard lot size, as you can see. So if I say my lot size, for example, my stop loss is 55, it will calculate and give me this number. Give me this number. If I say it's 40, it will goes like this. If I say my stop loss is 10 pips, it will goes like this. So again, you can calculate it manually, or you can use this cheat sheet, or come use this website, Cashback Forex, for example. This, you can use this website, cashbackforex.tools, position size calculator. You can use this. So you understand now, you only have to risk 1% per trade, and you have to gain at least 1.5R or 2R or more. And remember one thing. If RR goes upper, then win rate decreased. Or if RR increased, then win rate decreased. Not D, we don't need the so always set this static. Always risk 1% and always get 1 or 1.5R or 2R or more, depending on your strategy. I said before, you have to backtest your strategy and write the details. For example, their win rate per 10 trades, and for example, when news came, or something like that. So this is risk management. This is real risk management. Let me show you some example from last, for example. So we're going to short, for example, this, and our stop loss is now, I don't know why I do it like that. For example, 13 pips, I don't care about this. I put it on risk reward 2, and I have, for example, $10,000, 13. I'm coming here and stop loss per pip 13 and calculate, and I copy these two, 76, 0.76 lots. And for example, another trade, this is my trade, my stop loss is 6 pip, for example. I'm going hit 6 pip, and I will use this 1.66 lot, and I will do this, and my risk per reward, risk to reward, or risk per reward will be 2 again. So this is really easy. Always follow this. So like that. And one last thing that I want to say, always choose your lot size and always choose your risk carefully, because changing lot size, or for example increase it without reason or increase risk, will ruin your psychological state and mental state at the moment. That will ruin your trading, and you will lose more and lose more. And we will have also a chapter and episode about psychology before we going through the advanced things, because these are very important for me. So please always understand that risk per reward, or risk to reward, will be static, which for me is only 2R, or 2% per trade, and my risk is 1%. Never change it, backtest or practice with it on replay mode, for example, and calculate it. And for your this session, you have homework. This is your homework. These are pips as a stop loss, and you will have an account. Your account is $5,000, and you have to risk 2% per trade risk, and you have to gain 4%. So what is your homework? You will send me and write me on your note of phone or a paper these numbers about that account, and you will write me the risk per dollar and reward per dollar too, which means 2x, and also the lot size for each trade. For each trade, you will send me lot size. And this is your homework. Thank you for watching this episode.